following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Good afternoon from TFNN. Welcome to the December 18th magnificent Monday edition of the Tom O'Brien Show. I'm your host, Stevie Perseverance Rhodes, and I believe that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. I'll slow it down. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, let your fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading up 157 points, 24,808 is the print. S&P's up 17 points. That's about 0.7%. Leader out here is the semiconductor index, up nearly 2% or 24 points. Russell's up a little over 1%, 17 points. You've got gold up 0.5%, silver up 0.7%. You've got, what do you got? Natural gas, the February contract is up 4.5%. We'll take a look at all those. Of course, I want to take a look at what you want to look at. But let's start by taking a look at what's going on in the world of the S&P 500s. Let's do this two different ways. Let's do this by one, take a look at the SPY. And what I'm going to provide you with is a little bit longer-term view because it's very clear about the A to B equals CD to the upside. That's our lightning bolt pattern that is on the move out here. If we take a look at this SPY, put on a monthly chart, we're going to see the swing point from back in May of 2015. That price high was 213.78, 1.9 million shares. When that level was passed, it was passed with volume. 2 million shares, 2.073, November of 2016. I'll put up what I really believe is the longer term A to B equals CD inside of the SPY so that you can see what its price projection is. The 1-to-1, inside the SPY, is 327.77, but that is not where price will stop. Price longer term is going to make its way to the 367.67 level. Now let's go take a look at the S&P 500. In this case here, it's a monthly chart, but what you and I are going to look at are the horizontal trading range boundary lines. So for those of you that are longtime listeners here at TFNN, you'll remember Bud Rolfs, and Bud Rolf created the primary trading ranges. He used to do all of this manually. I went ahead, I thought that tool was so cool, so important, that I went ahead and automated that tool for my eSignal software out here, and it automatically picks up what Bud's work was, which was trying to identify the largest number of either opens or closes from a candle standpoint. The little dashed lines on my chart out here for the S&P 500 measured at 1327 and 1106. We've had the largest number of opens or closes there. That sets up those primary, or what I refer to those horizontal trading range levels. Once we know that math distance between those two, we just added and subtracted to each level thereof. And when you pass through one of these areas, which was 2654 inside of the S&P, we're now at 2692. As long as price stays above 2654, that's going to be your first benchmark. Then price is headed to the top of that next horizontal trading range area, 2874. So I gave you a much larger term view when we looked at the SPY. Now we've backed off just a bit to kind of show you, to show you the next level as to where the S&P 500 is headed to. We can do the same thing out here by taking a look at the NDX 100. Let's go take a look at the QQQ series ETF. We'll do the same thing on a monthly basis. The swing point out here that you would use as your B point is December 2015. You had 757 million shares there. When that thing was passed, it was passed with lighter volume. Yeah, it wasn't passed with volume out there. Does that mean that the A to B equals CD pattern is not going to play out? It's a possibility, but I doubt it. So if we take a look at, just simply because if you can get an A to B equals CD pattern to confirm, in fact, if we do this here, you could almost say, now let's just do it. Let's do it this way. The A to B, the 1-to-1 on the Qs is 185.54. The 1-to-1.272, which is where price should be attracted to, is the 210.21 level. You're 158.67. For those of you that believe in the A to B equals CD pattern, this is the one you should believe in. If we go take a look at the NDX 100, we'll go ahead and take a look at the monthly chart with its horizontal trading ranges. You can see how back in 2000, the 4650 level acted as resistance. We can see that it's at 2361 and 1598 that are where on a monthly basis we have the largest number of opens or closes. Price has smoked right through the 6176 area. That's the level of support. Put that down on a pad of paper on any pullback, on any retracement. Because as long as price holds that level inside the NASDAQ 100, its next target is 69.39. It can get there in a heartbeat. If we take a look at the Dow, we'll go take a look at the Dow Diamonds. Let's do that same thing out here. Let's see if it passed its swing point with volume, because this way you can do this at home. The swing point we're looking at is a trading session from May 2015. 84 million shares were traded there. When it was passed with 87 million shares. This already, well, that is the short A to B equals CD. We're going to give you the long one. We're going to give you the larger A to B equals CD pattern inside of the Dow Diamonds. You can see that it's well on its way to the 269.13, 1-to-1. But is that where it'll stop? No, sirree. 301.39. That's really the target. If we take a look at the horizontal trading range level, you can see how the Dow has cleared that 23,819. It was never 23,000. It's not 25,000. That's the number. The next level of any kind of resistance inside of the Dow, 25,484. Again, this is Steve Rhodes filling in for the one and only Obi-Wan Kenobi, Tom O'Brien. Hey, Obi-Wan Kenobi, that would make a lot of sense, especially after this weekend. We've got the Dow up 157, S&P up 17 points. We'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the day. You know, it is about this time every Monday, excluding holidays, where I do a little bit of a segment with Tom. And so today is no different out here. So I kind of gave you the larger view of what the SPYs are doing, the diamonds, and we'll do the Russell 2000 because Robert had written in and wanted me to take a look at the IWM on a shorter term basis. So we'll certainly do that. And I think that it's really so important to make sure that you have the longer term play down. That's going to help you, especially if you're a trader, because you want to trade in the direction of the trend out here. So let's go ahead and, oh, man, I remember I did this last time. I thought I had this all set out here. You know, sometimes, I don't know about you, but for me, my system sets every now and then, resets itself. And when it does that, man, it just takes everything with it. And when I say that, the actual monitor that this thing is supposed to be set at. Oh, I can't believe that. You know what? Here's what I'm going to do. We're going to come back and take a look at that on the next break out there. That way I can manage this thing then. So stay tuned, because you're going to want to see this, because what it will lay out for you are the reasons why the markets are doing what they're doing, and also what you can anticipate out here. So let's go back just simply to the general markets. I'll take any questions that come in. Well, let's take a look at Robert's question. His first question, and it was really shorter term, was the IWM. And his question was, is the IWM making a short-term A to B equals CD pattern? So what I didn't get from Robert is the specific swing points, in essence, or the time, or the levels that he was looking at. But let's take a look at what we do know out here right now in the IWM. The IWM is trading underneath the trading session from December 4th. That had volume of 36 million shares out there. So that is still the swing point that it's trying to get over. So Robert, from a shorter term standpoint, if that's what you are looking at, you would like to see the IWM close above 155.41 and do it with more than 36 million shares. Does it have to have volume if you're to get a close above that? No, it can still form an A to B equals CD to the upside. Do your probabilities go up higher that you've taken out a level of resistance with volume? Yeah, but doesn't mean that that is a requirement It just would give you just a tad more comfort. But right now, what you and I know, volume today is 15 million shares. So it's not doing it today. It doesn't appear to be doing it today. And maybe somebody might say, well, you got to ask yourself why. Why? After the news that, small caps, in essence, or many of the small caps are going to pay less in taxes out there, how come it's not taken out its high out here? Well, there are just simply resistance levels. It's just like anything that you do. Maybe if you work out, you do a certain number of curls with a certain weight out there, and just add 5 more pounds to that weight and try to do the same number of curls out there, or try to go from 10 to 12 or 12 to 16 or whatever the number might be. There's some resistance out there, but if you work at it hard enough, you'll bust through that level. Well, that level in the IWM 155.41, you like to be able to see it do it with more volume out there. Now, if we take a look at the equity futures contract, that's what we're going to switch to now. That is TF is the letter symbol for the contract that typically for the Russell 2000 should be right here in front of me. Here it is. Okay, it is right here in front of me. Now, we take a look at this chart. You've got a 30-minute. That's in your panel on the left. Next to it is 60. Next to that is the 4-hour 240. Next to that is the daily, and next to that is the weekly. We can see inside the weekly chart. I'll go ahead and expand this up for you. The weekly chart, the resistance level is 1553. 70 cents. We'll call it 1554. You're at 1551 right now. I do have a 10-minute delay, so we could actually be up there, and I wouldn't know. But what you're looking for, what you'd like to see, if you're long the IWM, you'd like to see resistance taken out. So you've got one version, which is the IWM. You've got another version, which I think is even more accurate and better to look at, which is inside the weekly chart for the Russell 2000. So any close above 1554, and price has taken out another level of resistance. On a much shorter term time frame, it's 1554.50 out here. That's the 30-minute market profile. It looks to me like price will go ahead and tag that level, but whether it will take it out or not, that I don't know. Otherwise, all other time frames, Robert, look pretty good on the shorter term time frame basis. How about Goldilocks? I know that Tom covers gold quite often, and most of you out there want to know what's going on with gold. So let's go take a look at it. The good news so far, gold is up $6.70. If we take a look at this daily chart out here, one of the things that we're going to see, one of the patterns that Stevie likes to always know about and can trade from, is one of those seventh wave moves. Now, it's a principle that's taken from Basil Chapman's Chapman wave. This is not the Chapman wave because it's not used at all in the same way that Basil's, other than the seventh wave, letter G. If we take a look at what gold has done thus far, from the high out here on September the 8th, if you start counting those waves to the downside, what you're going to see is that where price actually stopped, and how this works and why this works, I don't know. I just know that it does. And that's courtesy of Saratoga Bob, Z inside our Tiger's Den out there, and me with doing a lot of work and studies out here. And you take a look at that letter G that is on my screen, December the 12th, that is where price stopped. We know that it stopped because the next day it made a higher low. Now, that was potential bottom. Today is another sign that in fact is at least there's a counter trend rally. Bottom of rally, that we don't know. You have to start. You have to start somewhere out there. You're doing those curls. Maybe you start with 10 pounds, then you work your way up to 15 pounds. We'll call that letter G the 10-pound curl. And now, when you break above what I call Stevie's red line, that's the red squiggly line that is on my chart out here. When you close above that level, which is 1256.90, that's the February contract here for gold. Closing above that tells us that, in fact, the buyers are getting the upper hand for at least more of a counter trend rally. Now, you say counter trend rally. I thought that was a bottom. We don't know. But what should occur inside of gold is price ought to come up to one of these green dashed lines out here. So we can see in the 1300 to 1327 area, that's going to be a key level. That's utilizing this system. By the way, we're only in wave one, or leg one, and it's really key out here is we want to see gold continue to trade above Stevie's red line. It acts as resistance, and when it breaks free, it says, okay, like in a battle of war out there, resistance line has gone. The next resistance line really at $1,300. However, we have to qualify that just a tad. And that Tad says, let's go take a look at the profiles for Goldilocks on a 6240 daily and weekly time frame chart out here. The second benefit, the second bullish sign right now, or at least counter trend rally, is the mere fact that gold is trading about 1259.40. That is the top of its daily box out there. And as long as it's trading above that level, it's good. It says more counter trend rally to roll. So what's the next level where gold has to get above to give us a glimmer of hope that it's more than just a counter trend rally? Well, 1266.10. That is the number. That is the next key number. The actual high so far today was 1267. If gold closes at its highs, which I don't have any indication thus far that says that it will, when I say no indication, it's because I'm coming back here and taking a look at the 30-minute chart. The 30-minute chart, what did that form? Just like gold's bottom was a singing in the key of G, the 30-minute chart made a top in the key of G. How about that, folks? 1266.10. That's the number. Steve Rhodes with TFNN. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. We did have a question that came in. Let's go right to it. This was from Phil. And Phil basically was saying, I just lost the message, but he said, based on your positive outlook for the markets, the two sectors that have been beaten down, the biotech sector and the semis. He says he would assume that my assumption is that those would come back, and he was asking which of those two look to be better opportunities. And it's very simple. If we go so thanks for writing in, Phil. Appreciate it very much. If we go take a look at the semiconductor industry, today's a very important day for it. Now, I don't make this stuff up. You can use the other word if you'd like. But if we take a look at what the semis did, we take a look at the indice. When it formed its top out here, you can see that this too was singing in the key of G, letter G, on the day of November the 24th out there. Price started trading then below. Price was moving higher, doing less relative energy. It gapped down on the very next day. That was a sell signal utilizing Stevie's system out here. Price came all the way down to the time period of December the 1st when it formed a hammer candle. Now, a hammer candle, the interpretation there is the market is trying to hammer out a low. And in fact, that's what the semis were doing out here. That bottom of that hammer candle was tested on the following day, December 4th, tested on the following day, December 5th, tested on December 6th as well. So third time was a charm. Each time price closing just above the bottom of that hammer candle, telling you, telling me, telling the world just how strong buyers were at that price level for whatever the reason. Now today, we can see that price is trading above Stevie's red line. 1261.99 is the print right now. You're 1275.96. Now, the beauty about this inside the semis, so the answer is going to be the semis. Because of all these patterns, because the price oscillator, very bottom panel out here, difference between two moving averages, exponential moving averages, 39 and 19 out here, that was coming right down to the zero level. And that's where, utilizing this system, as Tom likes to say, the market squawks, walks, and talks. In this case here was Paul Revere running through the streets or the charts that are on Stevie's screen that says as soon as price closed over 1262, that's what the number is now. You see that number will change slightly out here. Basically, Stevie's red line, then it should be off to the races. And so, Phil, as long as price stays above Stevie's red line, this is the chart that has the most promise. You might say, well, how did you haven't even looked at the IBB? Of course, I did that during the breakout here when your question came in. And if we put up the IBB chart, hey, look, this has a pretty decent bottoming pattern too. Take a look at what it was doing. Price was moving lower, doing it with less relative energy out there. That's a pattern we like to take a look at. Didn't sing in the key of G out there, but it did. Did it? Let me see. Did it? Yeah. But what it did do on the trading session of November 16th, when it made its lowest low during this time period here, was it made a Tom DeMark, a TD sequential count. No, it didn't do it on that day. I take that back. I take that back. It did not do it on that day. But here, when we take a look at the IBB, we take a look at its price oscillator. That's at the very bottom panel out here. What you're going to see is price is still below the zero line. When things really get bullish is when that price oscillator is rising and it's above zero. So in the case of the IBB, the message as we speak right now, even though price is trading above Stevie's red line, is this is just counter trend rally. Only a counter trend rally. Same thing in the case of gold. Same thing in the case of silver. That's why I said that we don't know if it's a bottom or if it's a counter trend rally. We'll know when the price oscillator gets at that zero line, and we'll know that when we see how price is dealing with Stevie's red line out here. But right now, take a look at the bearish candlesticks that have been forming out here recently. Not today. Today's not a bearish. Well, it is, but it's not the kind that's a reversal that we're going to pay a lot of attention to. But you got this gap to the downside out here on October 26th. Price got up there. Big old turnaround, bearish engulfing on December 5th. Price got up there again. Couldn't get above the, couldn't close above the gap. So when I take a look at chart patterns out here, this has the potential to make a turn, but it's not there yet. So at 3:34 in the afternoon on December the 18th, the answer to your question is it's the semis out there. Now, I had said to you that I was going to go ahead and get my presentation, so to speak. We take a look at things a little bit longer term. And so let's go ahead and do that. We may not be able to squeak it all in here in the next few minutes, but we'll do the best that we can. And for those of you folks that would like to try my newsletter service, Mastering Probability, just come on over to the homepage at TFNN.com. You can go into newsletters, trading newsletters. You'll see Mastering Probability, or you can go to www.tfnn.com/Steve. That will get you to the same spot. Now, each day, what I provide to subscribers is a market outlook for the S&P 500, for gold, and for T-bond futures out here. And I take two views. We take a look at the long-term view. That way, for your your 401k, your retirement holdings, or whatever you might consider to be long-term, you have the outlook. In this case here, it's bullish. It's been bullish for a long, long time. That says stay in there. That says don't be trading around in your retirement accounts. If you've got a good entry points, it says stay there. Intermediate term, we're also bullish out here. Here's where I'll take a look at daily patterns that exist in the market and identify whether it's bullish or bearish. Are we in for a change in trend? Maybe we already have one. Utilizing this exact same set of tools. I do the same thing for gold. So this is as of this morning. S&P 500 bullish on the intermediate term as well as long term. Same thing when it comes to Goldilocks. And in T-bonds, long term bullish and intermediate term bullish. Now that might change at day's end out there, and I will change these each morning based upon market conditions. But that being said, when we opened up the show, we took a look at some longer-term views of where the ETFs were likely headed to, the indice ETFs, and the indices using a couple sets of tools. Let's take a look at a couple of other patterns that you and I trade that we know are very reliable. The first on the left-hand side of the screen is the NASDAQ 100. The NASDAQ 100 in January 2017 broke above the consolidation. This has been a consolidation that had been around since about 1995 or so. So about 1997, about a 20-year consolidation. What we know about consolidation patterns is that when price breaks through those, they offer the promise. They offer a price projection. It's called a measured move. It's equal to or greater than the consolidating pattern. In this case, right here, this says that the NDX 100 longer term is on its way to 88.45. We're at about 65 and change right now. That's one pattern. There's another pattern. That's a pattern breakout that formed out here where there's smaller yellow boxes. That also came in around the January timeframe. That January timeframe allows us to go ahead and double. That was at 38.88. That allows us to double that price, called a phase transition, that says that price is headed to 77.76. So the target range right now for the NASDAQ is between 77.76 and 88.45. Now, Phil had asked about the semis, and we took a look at the daily chart and said, okay, this looks bullish now. What we also know is that the semis last month, because it's a monthly chart, got up to their prior swing point. Didn't cross it, didn't test it. That's at the 1362 level. And those are the old highs from 2000. And that's where an indice does what they'd call a move of a move. You've heard Tom use the expression, it's going to do a move of the move. Well, it did, and it backed off. So, Phil, another level, if you're going to go long, the stocks out there, the SMHs, pay attention to the stocks. And what you want to see is you want to see a breakout above those old highs, 1362. Because if it does, this says price is headed to about 25.40. We get back from this break. We'll go take a look at some other charts and other things for you to consider, and so that you can get the long-term picture correct. If you get that correct, it'll make trading and investing a whole lot easier. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
And Tom's got the day off. This is Steve Rhodes filling in for Tom. We're taking a look at the typically the segment that I would do with Tom, just giving you another way to take a look at the larger picture out here. Because if you can get the larger picture, if you can wrap your mind, your arms, your body, your money around the larger picture out here, well, you will do just miraculous. You know, we talked about the IWM. We were looking at some short-term stuff, and we looked at the SPYs and the diamonds and the Qs. But let's take a look at the IWM. Right, the small caps. And you see, now we're looking at a quarterly chart out here. And the quarterly chart confirmed an A to B equals CD pattern to the upside. The 1-to-1 price projection is 188.48. It did that. When did it do that? Back in, for the quarter end. So back in, basically in December, as the quarter, September, October, November, December in 2016 came to an end. Price had closed above a prior swing point, 129.10 out there. It did it with volume. It did it with 2 billion shares versus 1.8 billion shares. So now you've got a confirmed A to B equals CD to the upside out here. The price target, the 1-to-1, 188.48, we mentioned that, but that is not where price will go. Why? For a couple reasons right now as of December 18th. The first reason, it only made a retracement of about a 0.382 retracement. On my system, it shows the exact retracement, 37.39. If you just simply take a rubber band, you wrap it around your finger as tight as you can, you know, so it blocks off the blood flow. You release it about 38%, and you let that rubber band go. Compare that energy to doing that same wrap around your finger and backing it off 61%, typically a 0.618 retracement. Which one is going to go further? The one you backed off 61% or the one you backed off 38? Exactly. Well, the market responds like that rubber band. So therefore, that's one reason why the 1-to-1 is not the price target. Now, I measure the 1-to-1, the 1.272, the 1.618. I even go beyond that. But let's just stay at this stage here between those three levels. The second reason is because this move so far off of that C point is stronger than the move from 2009 to the move in 2015 when that B point formed out here. Look where price is traveling. Left-hand side of that C to D leg out here. Two strong reasons why the market knew in December of 2016, yes, that was after the election, that there was going to be some type of tax legislation passed that were going to benefit the small caps out there and many others. So the IWM, Robert, longer term, is headed up to those levels out there. If we take a look at the Dow, let's go back to the Dow. Why is it that that Stevie believes that these are the patterns that have formed out here? If we go back to the Dow, 1924, so when it began, in essence, its run-up into the 1929 level, it formed this little breakout pattern here. Now, that took price from the lows in 1924 to the highs in 1929, it was a 350% move. Is the same thing underway right now? And of course, many of you might be saying, well, hey, the Dow topped in 1929. We've got you covered there. You see, when markets top, when the Dow tops specifically, it makes a pattern. How often before a bear market? How often before a correction? All the time. And if we take a look at the 1929 top out here, price was moving higher, doing less relative energy. The cavalry rode up. They gave you a nice big old bear sash, bearish engulfing candle, and price decided to then start moving lower out here. If we take a look at where we're at right now, this is a current chart. Well, this was as of a few hours ago inside the Dow when it was up at the 24,821 level. The same pattern that you looked at on the page before. This is automated by my system that I've developed out here. That pattern does not exist right now. If it doesn't exist right now, prices are going to go higher over the long haul. I'm not talking about what's going to happen in the next hour or so. But our conclusion is that there is no major top in sight. So for all those people and all those things that you write about, it's all BS. It was all before Steve shared with you this information about where the markets are headed to. Now, if we take a look at November of 2016, the Dow formed the exact same breakout move that we looked at in 1924. Yeah, the exact same. We're at new all-time highs. It made that exact same pattern. If we go take a look at from the very bottom, that low that formed, all we have to do is double that to come up with a minimum price objective. You know, when I first began working on this, I was like, it's going to do it, but when? Well, shoot, we're already near 25,000. It's 15,370 times 2, 30,000. That is like a heartbeat. But if we go ahead and we take the Dow from that low and we decide to multiply that by 350%, then you're looking at 54,430. Look, folks, before the Dow goes ahead and makes any kind of major sell signal out here, it'll do the same as it did in 1929. That pattern will exist out there. And until that pattern starts showing up, you should be thinking the markets are moving higher. Now, we've got more. There's more information out here. And many of you might be saying, geez, Louise, this guy just thinks these markets are going to go higher without pulling back. Now, that's a bunch of BS too. Okay? Because before Steve, maybe you would have thought that that's what I was saying. That's not what I'm saying. If you look at the Dow, this is a weekly chart. From that low that it made in 1924 to the high in 1929, there were 7 what I'll call good-sized retracements. In fact, there were a couple, 4 corrections. Correction being, we'll use the nomenclature that most people do, 10% or more out here. Look at the 7. So are we going to have retracements on this move to 31,000 to 54,000? You can bet your sweet bippy we are. And that's why you've got to be utilizing, you either need to know the different patterns that you play that can identify tops out there, or utilize somebody's services that can provide you with that information so that you can navigate around the way, so that you can determine when is the best time for you to put your money back at risk out here. So we are going to see retracements. Although we haven't seen much more than a 3% retracement, we're going to see one. We are absolutely going to see one. Can I guarantee it? I can't guarantee anything. All this stuff, you can decide whether really all this stuff is really BS, or before Steve now, you say, hey, wait a minute here. This guy's really got a point. He has really studied these markets. This all makes sense to me. Well, look, we have more too. So there's going to be retracements along the way up to that level of 50,000 or wherever the markets are going to. There was a great conversation inside the den. Maria in New York said it's amazing to her that the market makes most of its new moves overnight, which it does, which is another reason for you to be able to, you don't have to trade the futures, but you want to have access to the futures contract so you can see what patterns are going in play out there. And that is an excellent point. And the reason why that point is so excellent is because when we take a look at the Dow, you and I only think of the Dow priced in dollars. This shows you the Dow priced in euros, the Dow priced in yen, the Dow priced in Great British pounds. The Dow has broken out in all currencies. So for those people sitting in Europe, sitting in the UK, sitting in Japan out there, they trade these markets too. And they know that there is a major breakout that is underway. So the Dow's headed to 30,740 or 54,000. The IWM headed to 214, 24 or 247. The NASDAQ 100, 77.76, 88.45. The Dow is broken out in all major currencies. And, folks, there will be retracements along the way. You can check out my newsletter service, Mastering Probability, free 30-day trial. This is Steve Rhodes with TFNN. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in. And we did have a question that came in inside our Tiger's Den. The question is that one of our Tigers, Mr. Z, he sees a bottom forming inside of sugar, inside the March contract for sugar out here. So here's one of the things. We're taking a look at the market profile, 60, 240, daily, and the weekly. The one thing that I first pick up on, my eyes first pick up on, is the daily. And the reason why the daily chart sticks out at me, well, one, we have price. You can see it's traded back into a swing point out here from the June 29th level. So it's made a 100% move of a move by getting back into that area. And the other thing that is occurring out here as we speak, and we'll know tomorrow morning. So tomorrow morning, I'll try to remember to look at this, and if so, post it in the den before any shows start out here. But you see how today's candle session is turned orange. When these candlesticks turn orange, they're an indication that a bottom, a new set of profiles is beginning to form out here. And so you'd really like to know in those profiles, what are you looking at for support or resistance out here? I don't know ahead of time what those are going to be. So because we have an orange candle forming on the daily chart, we're going to have new market profiles, or we should have new market profiles come tomorrow morning. And what does it look like? Is it a possible? If you're looking for the bottom, your back is up against the wall, in essence, because it came back into the June 29th level. So that would be an early reason to consider taking a long trade. If we look at a 60-minute time frame chart, it has not proven itself to us. That's the only problem out here. What price has done is done nothing more than run into resistance, and that is the TAS profile. 1386 is the number out here. So closing above that on a 60-minute time frame, I know you also look at 60-minute time frames. Those would be good. And you want to see at least some type of close above resistance. So, folks, stay tuned. Hour number 2 for Obi-Wan Kenobi. Many of you probably went to see that Star Wars movie. It's going to be Basil Chapman. So stay tuned for that show. You can always catch my show 1 o'clock each day at TFNN, or you can catch all the archives, whether it's iTunes or however you'd like to do it. Just do it. Thanks for being here. Hey, have a Merry Christmas. Happy New Year. I won't see you next Monday. Take care.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Got our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Hi, everyone. Basil Chapman sitting in for the one and only Tom O'Brien, taking the day off, a well-deserved day off. Let's go to the markets. The Dow is up 140 points at 24,000, closing at 24,792. Hit 24,876. And this is very interesting. If you're looking at my charts on Tiger TV, you'll see on the left here is the daily, in the middle is the weekly, on the right is the monthly. And you can see each one is soaring. This is in a leg E. That's the fifth highest leg from the starting point. I label them alphabetically A, B, C, D, E. If they can go to F and G. It's a D that other things can happen. That's where you've got to be a bit careful. The weekly is in leg D. But look at the technicals. The MACD, the moving average convergence divergence in the weekly is still strong. The stochastic is very strong, a little lower than it was earlier in November, but still very strong. And we're looking at the monthly chart in leg E. And if you see there's a little circle right here around about the 21,000 level, there was actually a little bit of a breather in the market. It took 2 months, and then the third month it broke out. That little circle essentially says it's like what I call a propeller shaft move to the upside, and says that somewhere under 25,000 towards the 24,800 to 24,900, normally one would expect some kind of a retracement. Well, if you're looking at the daily chart, the technicals are very strong at this particular moment. I'm going to make it very simple. Rather than looking at the upside, because this is an upside trend, I would say that a close in the Dow under 24,400, 24,484 is that black line, the 9-period exponential moving average. So closing below that, going to the 24,400 to 24,340 area, that would start probably the first decent in time kind of pullback that we've had. Doesn't say how much to the downside. You have to go one step at a time. So in this particular instance, let's say a close below 24,400 for 2 consecutive days. That would signal, aha, finally the Dow is going to take a breather. Until then, we can see choppiness with an upside bias. The next few days will be very important. Let's go to the S&P. The S&P right now, SPX.X. S&P was up 14 at 26,990. And this is going to be a fascinating thing. We noted this, I think it was maybe a week and a half, 2 weeks ago. And what I'd said is it's fascinating. It's almost as if the Bitcoin activity overnight is being reflected in the stock market, so that overnight there's an incredible move. And during the day, what happens is the market gaps up and then has a fairly narrow trading day pertaining to what actually happened overnight and the close the previous day. And that's kind of what we've seen. So the S&P opens at 2685.92 and it closes at 2690. So that's just maybe 4 points higher over the period of the day. Once again, we're in this leg that says, be careful, we're getting to some kind of resistance, but the technicals so far are still good. Let's just say that it closed at 2690. Any 2-day closes below 2655 starts to signal, at least for me, some kind of a consolidation occurring. Now, this is going to be really interesting. At 158.55, the PowerShares QQQ Trust Series, the QQQs is the NDX 100 trading vehicle, had a really strong move going from 152 just on the 6th of December to today's high in the 158 area. So the high of 158.77 is saying that the MACD just turned up right here over the last 2 days, and the stochastic popped over 80%. I like to see it over 80%, it's at 88%. So here again, I'm going to say to you, let's not consider the upside where it could go to right now, because I do think the 159 should offer some kind of resistance. But the real support, a close below 155.90 to 155.20 for 2 days in a row says, the QQQs are finally having a bit of a breather. One of the reasons why I'm saying that is the SMHs, the semiconductor index, has been lagging some. It used to be leading the NASDAQ on the way up and the way down. So we got to watch this, monitor this quite carefully. Yeah, it was a nice day. It was up 33 cents at 99.58. It really should be in the 103s by now with this kind of move in the market. So this lagging sector, which was the leading sector, is something to note. And the next thing we're going to look at is IWM. IWM is the Russell 2000. Has to get to a leg D. Remember, we like to look for Ds in the Chapman Wave methodology. And that peak C on the 4th of December in the weekly chart at 155.40 41 says 155.42 will start lately. That could happen in the next couple of days. Going to be watching this carefully because it's the cup formation. MACD is just crossing positive, and the stochastic is okay, not great. So it's the weekly chart that's going to be very important. And if it does go to that 155.42 level, that starts to exceed the weekly. So all of a sudden, the IWM, which was a lagging indicator, then a leading indicator for the general market, is kind of lagging right now. And we're going to see if it plays catch up or if it actually becomes a leader, if it can break into the 156s. It has to hold 151.50 support. So keep that in mind. Let's go to gold. This is going to be fascinating. Why? Because gold is up 7 at 1264. Considering the decline that it's had from the 1370 level down to the 1240 level, this is a meager, this is really not a very good rally in terms of price. It should be much higher, but it is moving higher steadily every day from the low that was made at 1238 back on the 12th of December. However, from the weekly chart, you'll see that the MACD, the moving average, is still very, the green line, that's the 9-period differential, coming down sharply. The stochastic's flat at 13%. It's not showing the veracity. It's not showing the strength. And the monthly chart has been making these arch formations. Until gold can really snap into the 1250s, I really think it needs to get to 1280. Then I'm going to say that is a fabulous move. Why? Because then it should impact the dollar negatively. And the dollar today is down 24 cents, came back from the lows. I kind of like the dollar. For our opening call subscribers, that's my daily newsletter. We've been long since the exact low of the September the 8th low that was actually a 70. Let me show you something very interesting. Look at this incredible arch formation going 35 weeks from the left side, made low of 91 right here. From 91.92 back the week of the 6th of May of 2016. Takes 35 weeks to go to a top at 103.82 the week of January the 6th, 2017. And then exactly 35 weeks to come down to 91.01, the low of the 8th of September. Now it's had a pretty nice rally, but nice is not good enough. Dollar needs to get to 95.70s. It's at 93.71. It needs at least another 2 points to show it's got strength to keep going higher. I'll be right back. Basil Chapman sitting in for Tom O'Brien. Dow was up 140, S&P up 40.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman sitting in for Tom O'Brien, and the Dow was up 140 at 24,792, another all-time high. Was this the 70th or something all-time high of the year? The S&P was up 14. We were looking at the dollar. You can see the dollar's holding this black line in the left chart. That's the daily chart, holding the 9-period moving average, treating it as a support level. But I have to tell you, there's a left side, right side price time match with this cup formation, and that says by the 22nd of December, the dollar needs to be climbing right into that 94.50s. I say no, it actually needs to go high. And then it's going to say dollar is going to be, at least for a while, a little bit more important than maybe some of the metals. Now let's look at high-grade copper. High-grade copper has had it was looking horrible. It had that terrible day. That was a real sell-off the day of the 5th of December. At 3.10, goes down to 2.94. And then has an inside bar, a doji candle, and all of a sudden starts to climb. Look, only green candles. This is very good at 3.14, and it's actually a good sign overall. When I like to see copper rallying, I just think it's a good thing. So what we also want to look at here was the TLT, and that is the Lehman 20-year Treasury bond ETF, trading at 127.26. minus 1.09. Let me just show you this chart here for a moment. It's black, so let me just see in the background. Yeah, you can see it. So the white is the 30-year yield. This is a weekly chart. It made an arch formation, and now it's had a very strong rebound. That's this today. The 10-year, the TNX, that was the TYX. The TNX, the 10-year yield, remember yield, not the bond, but the yield, or these are T-note yield, rallied a little bit. It's at 23.92. And the 5-year, the cyan color is in leg C. And for subscribers, I'm sorry, over the weekend, I put in a D there. It was a C. I misread it. It's a C in the FVX, the 5-year T-note, cyan color, light blue. So I'm looking at this, and at leg C, once before, back in the week of January the 1st, it made a peak C, the 5-year, and then declined sharply. The 10-year was pulling back with, there's a weekly chart, over a series of 2 months, it was pulling back and then fell sharply. And the 30-year made a high back in the week of 13th of November and kept falling while there was this divergence. There's a difference in the pattern here. And the difference is that you've got much narrower yields. Now there's a kind of a flattening. And this is something that we have to keep in mind. There's no instantaneous reward for recognizing it. What happens is it takes a while before the market, and it's one of those things where 3 out of 5 times the markets pull back really sharply when you've got this, the difference between the 5-year getting closer and closer to where the 30-year is. Okay, so with that said, a couple of things are important. The sell-off was already occurring in the market by January the 1st. 2nd was the trading day. The 1st was the beginning of the new year. The market had already been pulling back from November. This is different. We're making all-time highs. So yes, there's always that one little aspect that's different, and you've got to take it into account. This is just something to keep a note of. And one of the reasons why it's important, we'll be looking at the XLF, and this is what I'll be discussing tonight. Oh, let me just tell you. For those of you in the Boston area, it's very interesting because we are doing, I'm fortunate enough to be the guest speaker at the holiday celebration meeting for the Boston Investors Group and the Boston Investors Business Daily Group, Monday, December the 18th, that's tonight, 6:30 to 7:30, a potluck reception and networking, and at 7:30, Seeking Investment Opportunities for 2018 by Basil Chapman. And it says, please RSVP if you can. But of course, if you don't have time, you don't have time. We'd love to see you there. And as I say, I'm fortunate enough to be the guest speaker. And it's really quite easy to get to. It's MIT Building E51, room 335. And if you know MIT, you need to get a degree from MIT to be able to go through the labyrinth of all the rooms. This is real easy. This is right on the corner. It's 70 Memorial Drive, Cambridge. That's what they say. But in fact, what it is the corner of Wadsworth and Amherst Streets on the 3rd floor. You just go through the entrance and you go up. There is parking. And if there isn't any road work being done, there should be quite a lot of parking. So looking forward to seeing you. And come up and say hi. We always have them, whenever we have these meetings, there are always tigers there, folks that are listening to TFNN or subscribes. Come and say hi. Not only that, tell me your name, because if you're in the den and you are Bluebird, I want to know. I don't know who Bluebird is. Tell me who you are. Okay. So looking forward to seeing. That's tonight. And then another 2 hours, it starts 6:30 to 7:30 potluck reception. And if you can bring some sodas or something, that'll be nice. I'm sure they'll appreciate that. Now, the XLF did not make a new all-time high today. It did make an all-time high on the 12th at 28.33. Let me just type that in. 28.33. And what's very interesting about this is that within the context of what is going to new highs, the industrials, there are certain sectors, there's certain stocks that are absolutely on fire. However, if you look at the XLF, you'll see that this climb in the weekly chart there's a little doji candle 3 weeks ago. Then last week, there was a long-legged candle, not quite a doji. And now we're starting off a little bit below. So what happens over the next 2 days is going to be very interesting. Why? Because if the TLT starts to pull back sharply and drag the other, now if the 10 and the 5 years start to come down quite sharply, yields that is, that'll be a negative for the financials in the sense that they're really looking for higher yields because that's one of the ways they make more money than they have been making. However, having held at this particular level right here just gives me levels to watch. And for subscribers, we have a financial stock because I think it's very important at this particular time to consider financials as being perhaps, even though it's, look at this, a very strong leg going to an E in the monthly chart. I think in a sense, the financials are a little bit, they are lagging because I'm anticipating that a Goldman Sachs is going to have a little overbought right now, but I think it's going to have a good run in 2018 because this is only leg B in the monthly chart. So this is a leg E. Got to be a little careful right here with the financials. But it's fascinating because within different sectors, some of the stocks are doing very well. We have an auto stock which is still doing very nicely. It had a very good bounce over the last 2 days. It's steel stocks, not all of them, but some of the steel stocks are really coming alive. It's just very interesting that at this particular time, the indices are having differences in making the new highs, and they're kind of rotating through it. And if you look at the New York Stock Exchange, the very broad NYA went to a leg today, and that's a new all-time high. The technicals are good. They're not great, but they are good. And this is a very broad index, leg D in the weekly, strong technicals there. Technicals in the monthly, very good. So I'm just going to say at 12,787, if the NYA closes 2 sessions under 12,006, now I'm going to make it 12,550 over the next, I'd say the next 3 weeks. That's going to say, uh-oh, be careful. Now we're having a consolidation. And that's the way I think that we need to go through all these different sectors because they're all doing something different. I'll be talking tonight about the PPH. The PPH is, in fact, right here. The PPH is the pharmaceuticals. Suddenly they came alive. They were being beaten down. The monthly chart is not great, but the weekly and the daily have improved tremendously. Basil Chapman, this is the Tom O'Brien Show. I'll be right back after these important messages. Dow up 140, S&P up 14. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman sitting for Tom O'Brien, and my service here at TFNN is the opening call. And it's a daily newsletter, very comprehensive newsletter. I send charts out all the time. It's daily because I send out charts Saturday, Sunday, in preparation for Monday. And I follow every day. We follow our stocks, whatever we have. And just to briefly kind of put into perspective, we did have a short on Thursday, which looked great for a moment on the Dow. It was a trading short. And we were stopped out at the open this morning for, I think it was a 1% loss. But everything there said if there wasn't anything positive about the bill, the tax bill, we could have had at least a pretty good pullback and then come back up to to make new highs. However, fortunately for some subscribers who are still long the Dow from 22,290s, that is a core position. It's like a weekly position, and there is no change there. I believe from what I'm looking at here that if there was going to be shorts put on, I would rather have short-term trading shorts and then add to them than to disturb this position, because at this particular point, to go back to the 22,300 level, it'll be 2,400 points from here down. That's 10% correction. I don't see that just yet, but I am looking at extremely overbought areas. But however, if you're looking at a PPA, which is the ETF Power Shares Aerospace and Defense ETF. You know, for years, people have said, I'm not shorting gold. Anything can happen overnight. Anything can happen. Actually, gold's just been kind of doing nothing for a little while. However, when you're looking at the PPHs, the aerospace and defense, I would say the same thing now about Raytheon, etc. I mean, Raytheon is at almost all-time highs. It's at 188 right now, down 265 on the day. But it went to the 194 area, an incredible move. So on a purely technical basis, we'll be looking at stocks tonight that are extremely overbought. But they are in areas that you kind of feel a little nervous about shorting something in the defense area when anything can happen around the world, right? So GD is another one. GD is General Dynamics. It's had a deeper pullback in the weekly chart. Everything about it says this should not make a new high very soon. It should be pulling back. Do you want to go ahead and short something like that? That's a tough one. Question in the den about Tesla. Now here's a fascinating chart. This is it's real tough. I'm calling this D right now in the daily chart. A B underneath the major high of 389.69 in the weekly chart, and a peak D in the month. Remember, D's where you got to be careful. You can go higher, but D's where other things can happen. So this is what I'm looking. So the question is, Basil, can you give your technical analysis on Tesla? It is my only short position. Okay. If you just shorted over the last 3 days, I'm going to make it real simple, and I'll tell you why. If Tesla, with the MACD very strong in the daily, stochastic good at 86, but pulling back sharply from where it was. If Tesla closes above 347.44, that was the most recent high. That was the high on the 14th of December. Closes. It can't just pop and drop. It's got to close. In fact, I'm going to make it even more specific. I'm going to say, now this has got nothing to do with the way you would cover your short. I'm just going to say, in my work, if it was to close above 350, just get it back into the 350s, I suspect it's going to go a little higher. So that's, to me, that would be very clear. As a trading position, I wouldn't go 1 penny above the peak D, even if it just sneaks to a peak E, and then you have to think about reshorting. I would not have that kind of risk because it's that kind of stock. It is a very volatile stock. Now, drove past the Tesla players on the way to tennis on Sunday morning, and I'm looking, I'm saying, gray, black, white, gray, black, white, gray. Oh, red. There was a red Tesla. Very dull colors, I must say. And I think colors are going to be the thing. Coming into 2018, you're going to go back, I think, to the two tones of the 1950s. The tires are going to start seeing colors from now on. This is my Trends Watch overall impression. But when I look at Tesla, I think it's kind of lagging in looks. It's very nice. There's nothing wrong with it. But I don't think it's as modern as the concept itself of the Tesla is. So I think that's going to start to look a little old. My gut feeling is that Tesla is going to have tremendous competition in 2018, and it's a battery company. A lot of things. He's a brilliant guy at Elon Musk. I know someone whose son works for SpaceX. Just very impressed with what he can do. But boy, that debt is incredible. So purely on a technical basis, what you want to see, Dano, is to see a close underneath the low of Friday, 335.76. If Tesla goes to 333, that 331 9-period exponential moving average is going to become even more important. So I'm saying to you, I would not mess around because you want this trend of the market being sharply higher, Tesla being down today to continue. You want it to have made its high, run out of energy and starting to pull back. The technicals are good, so they're going to have to weaken a lot, and they'll only weaken when Tesla's at 327. Then you're going to see some fireworks to the downside. But until that happens, be a little careful, put in your stop. So here, one of the things I want you to look at here is in the financials. I was asked about Goldman Sachs. So Goldman Sachs has made this little doji candle up to 81 today, 259.98. The MACD is good. Stochastic is good, but not great. I'm looking at this and I'm saying Goldman Sachs on a weekly basis did everything we were looking for in terms of the analysis based on the Chapman wave left side, right side price time match. It took 2 weeks, an extra 2 weeks to actually break above 255.15 based on this cup formation, this double cup formation. So it's done everything it needed to do to break above 255.15. The last time it was at peak E, it had a very sharp decline. I'm just watching. I'm not saying anything other than if Goldman Sachs starts to break down, it needs to close, I would say 260 right now. Any two closes underneath the 9-period moving average of 254 is a heads up. But if it closes under 251 in the next 2 weeks, I think it's a timeout. Goldman Sachs will take a timeout, and then we're going to look for it a lower down to see whether it's a buy for the next big move up in the monthly chart. And I'm going to try to do that with all the stocks. I want them to, the ones that are extended, theoretically, you would like to see some kind of you want breathing. Markets need to breathe. This market has not really breathed at all. What it's done is rotated from one sector to the next. Look, the IBB, this is the NASDAQ biotech ETF, trying to rally, trying to get out of its own way here, trying to push into the 108, 110s. Of course, it's now a 3-for-1 reverse split. It was a 106, so it was a 318. Now it is at 106. So what we're looking at is if the IBB, see now normally in this rotation, you would get a pretty heavy move into a sector that had lagged. Well, they keep going into the IBB and it just doesn't have strength. And I suspect that next year, we're still going to hear a lot of talk about costs involved in both pharmaceutical and biotech, what people have to pay. And I think that's going to hang heavy on some of these stocks, not all, but some of the stocks. So the IBB is really struggling here to break out. It needs to get into the 109s, and that'll be really good action. Right now it's at 106s. Watch out if it closes under 104. I'll be right back. Basil Chapman sitting in for Tom O'Brien. This is the Tom O'Brien Show, Dow at 140. We're right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Hi, folks. Basil Chapman sitting for Tom O'Brien. As I say, the Dow is up 140, an all-time high, 24,792. S&P up 14 at 2619. This is going to be very interesting. 690. The volatility index, VIX.X. Here we go. So the volatility index is not at the lows. Markets are at highs, but 8.56 was the most recent, actually. 8.56 was really one of the most important lows we've had because it was a multi-year low. Now, you can go back as long as you want to this VIX index, but this 8.56 was really important. So within the context of the volatility index, it is at a point where you can start to say, just on time alone, you can count all these different weeks. You get to the fourth week or so, third, fourth week. That's almost always when you get a spike. There's no guarantee. It's not like there's a book that says, hey, when the VIX Volatility Index weekly chart goes to its fourth lowest low in 4 weeks, it's going to rally. But it's saying that, look, there's a divergence between the MACD, which is still quite strong, the stochastic, which is holding a lot better than it was at the 27th week of the 27th of November low at 856. So it just says, hey, there are a lot of things here. And I'm anticipating, yes, there's end of the year holding pattern because people want to keep maintain their positions into the 1st of January. And what do you think on the 1st of January, all of a sudden, millions of people are going to say, go, taxes, we're getting out of the market because now we're going to have better taxes. No. They're going to try to hold as long as they can. They're going to say, you know what? Some people will absolutely, they've been waiting, they will get out. But majority of people are going to say, you know, if the market keeps holding up, why would I want to get out? Look, I want to get out 20 times in the last, let alone year, in the last 2 months. And I didn't. And look what it's done for me. It's fantastic. So this is going to be a very interesting period. So for my subscribers to my opening call, my daily newsletter, I can't. I used to do this every single day. I cannot. I don't have time anymore to do that. There's just too many other things. But I do a very comprehensive look at the markets at least once or twice a week, and I show the different quadrants. There are 5 quadrants, right? This is the Dow 120-minute chart. This is the Dow, the VIX 120-minute chart. Look at that arch, trying to hold the 921 level. This is the Richard Arms Index. It gave me a signal that said this is one of the few times it's missed. It's actually the second time in about 4 months. Otherwise, it's been an incredible instrument for us. And it said that the Dow, from the close on Friday, today the Dow should have had weakness. Of course, with the taxable, it couldn't do anything but go up. But it said that technically we should have had a dip and then a rally. We never even got a dip to negative. And this is the Dow and the S&P, a very simple chart. That just shows the bar chart of the Dow daily and the S&P daily, and then a very comprehensive look here at the different sectors and what's important, etc. So that's that. And then on my the daily charts, I show, if I can just get to it right here. Yep, there it is. So then I would show this is the Dow. This is the Dow daily. It's in 2 frames. This is a bigger frame, shows the 9-period and the 20-period exponential move. We haven't even, since we broke out back in, that was early November, the Dow has not even touched the 9-period exponential moving average, let alone the 20-period red one, exponential moving average right there, the red one. So that's important. This is the same chart. I've added the MACD, the moving average. Look how nicely it's holding up. And the stochastic is flat, which is usually a sign that you're getting a little toppy, but we haven't topped out yet. And the on-balance volume is screaming higher, getting a little bit overbought. So these are all the things I do every single day for subscribers. And then I have my Traders Corner where we show different things and I give levels to watch. So a question in the devil's a question, tops 300. So this is Berkshire Hathaway, BRK.B, Berkshire Hathaway B shares. And I really think Buffett is one of those rare individuals that doesn't have a portfolio of stocks. He has a portfolio of companies, and they're made up of stocks. And that's a big difference. In other words, you have to run the company. You're not just trading in and out of stocks. So it's gone to a leg D with a little doji candle, says, hey, be a little careful here at 199.34. This is the B shares. The A shares, I believe, yeah, they have, 300,000? 300,000 for one share. So this is in leg F/B, an alternate count in the weekly. Weekly is still good, but getting a little toppy. And the monthly broke out of its major resistance in this very long-term chart in leg E. So Berkshire Hathaway, I think keep it on your port, BRK.B, that's the way I get it, or -B, /B. Put it on your list. Watch it closely. It's a very telling stock, and it's telling us that this rally has seen big participation in insurance and all other stocks, because that's what Buffett has in Berkshire Hathaway B shares and Buffett Enterprises. And at $199.34 up $1.56, working hard, getting into this kind of rectangle that says if Berkshire at 199 closes any 2 days in any week below 194, I would say be careful. Berkshire's taking a bit of a breather. 191 would be the big support in the weekly chart. And that's the only way I would like to go through this, because I don't want to say Berkshire has a 1-to-1 and it's pointed to 290, or this is, we're going one step at a time. I could easily do that because you have the tools. No, I know one step. You can't talk about 290 when you're at 199. You have to say the next step is this resistance here. It broke it, etc. But for the bigger picture, I like to look at the technicals, and the technicals in the monthly are still very positive. That's going to be very important. Question about FCX. This has been on an absolute tear, an incredible tear. It is Freeport-McMoRan, copper, and it is trading at 17.31, up 33 cents, a straight up move. Look at this, the little doji candles there, almost like a halfway marker, a filler up of gas. Change the battery if you're Tesla. Look, and it screams up to 1735, and it's just about to hit 1754 is the 200-period exponential moving average. What does that mean? The 200-day moving average, when Freeport-McMoRan broke its support at that 200-period moving average back in September of 2014, up at the 3491 level. It couldn't close above not even the short-term 9-period moving average, and every time it tried, it failed. Look how far away it went. It went all the way when the 200-period moving average in January of 2016 was at 25.52. Freeport was making a low of on the 22nd of January of 2016 at $3.52. It got cut by a factor of what, 90-something%. It went from 35 to 3.5? Yeah, 3.5. Not good. So now it's running and running and running, and it goes close to the 200-period moving average, fails. Now it is so close. That makes this a magnet. It says it can go higher, but it's going to come back and retest, and it's going to hop around here for a little while. And I would say the 18s to the 1550s could be the trading range for Freeport-McMoRan if it starts to pull back and break 1650 support. Then I think it starts to chop around. But it's fantastic. At this point, it's done really well. It's kind of mirrored copper's big rally. So we've got a break coming up. Let's say that again. The Dow's up 140, all-time high, 24,792. S&P at 2690, up 14. We'll be back. A really strong day. We'll be back straight after these messages.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, Basil Chapman sitting in for Tom O'Brien. It's been my pleasure to be here. Well, let's just run a couple of things right now. What are we looking for? So the volatility index, the VIX trading right now, whoops, dollar volatility index, let's go back there. Trading at, why did that happen? Yeah, get rid of that, get rid of that, get rid of that. Data 1, data 2, oops. Remove, let's hope that this is going to work. There we go. Got it. Okay, so the VIX index trading at 9.53. Make sure that you keep an eye on the VIX index. You'll find in different packages with different, might get through TradeStation at $VIX.X. But it's at 953. That's very low. If the volatility index is going to have any say in the matter on a downside move, it needs to get above the 200-period exponential moving average in the daily of 11.12. If it starts to go to 11.12, it needs to hold there. It can't just pop and drop, which has been happening so often. If it holds there, finally you're going to see some pullback in the market, at least more sustainable on a few-day level. Maybe it'll be a week. We'll see. But in the meantime, just hold tight. You've got your positions. Make sure that you have stops in place. But we are getting real close because of the news, running out of news. So I think that after that, we're going to, after the bill and everything's passed, whatever happens there, we might drift into the new year. It's the first week of January that I think we need to be watching for other reasons. And it's just this time price relationship that I have in some of the charts, and that's where it might become a little bit vulnerable. But in the meantime, what we're looking at is the rotation through the different sectors. Will the steel stocks continue to rally? Is this part of the next phase of the factor that we're going to be looking at, which is infrastructure? Is that going to come about? So there are aspects that can really buoy this market in 2018, but it would be very nice just in terms of breathing if there was a pullback, and then you can get some of the stocks you've been missing out on. So keep that in mind. Thanks for being here. I'm hoping to see some of you right here at the Boston Investors Group Holiday Party meeting at MIT Building E51, room 335, on tonight, starting at 6:30. Thanks for being here. Have a wonderful evening, and Tom will be back tomorrow.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.